And welcome to a very special edition of the Investor Download. It's all about the US election. And with me in the London studio to talk about how the outcome might affect the economy and markets is our economist, George Brown. George, you've been suffering from a little bit of a bug recently. How are you feeling?
I'm feeling better now. Thanks, David.
Yeah, you look a lot better as well. And by satellite, I think that's what they used to call it in the old days, from New York is head of multi-asset America. It's Adam Farstrup. Adam, welcome to the show.
Thanks. It's good to be here.
Yeah, no, it's good to see you. Whereabouts in New York are you at the moment?
I'm in the office, so we're here in beautiful Midtown overlooking Bryant Park.
Ah, lovely. A lovely view, I'm sure that is. OK, let's get straight into it. I'm sure you all agree it's been a bit of a wild ride over the last 2 weeks, even by current geopolitical standards. We've had the attempted assassination of the Republican nominee, Donald Trump. He survived and then announced his running mate would be J.D. Vance, who was a former adversary just a few years back. Then Democratic president, a few days later, Joe Biden announced he wouldn't be running anymore for a second term and endorsed his vice president, Kamala Harris, to be the new potential nominee for the Democrats. That's yet to be ratified. But George, even by recent standards, this has been breathtaking, although not entirely unprecedented. First, can you just give us an update on what the betting markets are saying and how they've adjusted since everything that's gone on?
So it's a good question, David. At the betting markets, very quickly moved to price in the probability that Kamala Harris is going to be the Democratic nominee, to the extent that it's 95% priced in by the betting markets. But when you look at what's happened in those 72 hours, Harris has managed to raise $100 million in funding. A lot of the sort of serious challengers who might have taken on the nomination, they've fallen in behind her, as have a lot of the sort of senior leaders of the Democratic Party. They've come out and endorsed her. But I think really it was always inevitable that, if Biden was to step down, it would be Harris. And that's because his campaign has very quickly pivoted to supporting her, so the staffers, but also crucially the finances. Now, if it wasn't Harris, it wouldn't have probably gone to another sort of candidate. And that's because Harris was still on the ticket. She was going to be the vice president. So she's been able to utilize all of that funding and that kind of support from the staffers very quickly. And so the alternative, I think, for a lot of the challengers, they were looking at that and thinking, that's a mountain for me to climb, so it's never really going to happen. But also, I think they wanted to avoid that kind of blue-on-blue fighting that, really would have just favoured the Republicans. So I think, the betting markets, 95% is pretty high, but I think we can safely assume that Harris is going to be the nominee.
And has that had any effect on how the betting markets think the outcome of who might win the presidency?
It's had some impact, and the reason is because I think the narrative amongst the election in recent weeks, particularly, but for a long time now, has really centred on Biden's ability to serve out another 4 terms. Those 4 years. That sort of questions about his age, and I think with the change of the guard, I guess, on the Democratic side, that gives them a chance to reset that narrative, and so without that handicap, I guess, of Biden's age, obviously inevitably gives them a bit of a boost. So if you look at sort of the betting markets now, the odds of Trump winning the presidency has taken a bit of a knock, but it's still 60%. So it's down from about 2/3. But like I say, it's still about 60%. So he's the odds-on favourite. And I guess the reasons is, if you look at the polls, he still leads Kamala Harris in a lot of the recent polling. But also, of course, the assassination attempt that you mentioned at the beginning. I think the imagery associated with that and the boost that's going to give to the narrative of his campaign, that's going to give him a tailwind right through to November.
Adam, have the markets reacted at all?
You haven't seen much of a reaction in the market yet because, it's very hard to price in the specifics of how the markets will trade under the different presidencies. I think when you think about the fixed income markets, first of all, under whether you have a Democrat under Harris or whether you have the Trump presidency and the Republicans, it's really going to come down to how does the Senate and the House move forward, and what will the fiscal policies be? Because the concern on the bond market side is really the fiscal sustainability in the U.S. And there, both candidates are talking about policies that aren't going to necessarily bring the U.S. budget deficit back in line. It's going to be very different approaches to how they think about the fiscal policy, but in both cases, you still have a very significant debt picture of the U.S. On the equity market side, I think it's going to be much more of a sector rotation trade. So interestingly, Biden was not viewed very positively by Silicon Valley, by the tech markets. There was some displeasure with him. Remember, Harris is deeply embedded in that sort of Bay Area, Silicon Valley, from her original kind of political upbringing. So there's much more comfort in sort of tech circles with a Harris presidency. I think there's probably an expectation of maybe less aggressive regulatory action, certainly supported by recent Supreme Court rulings. So that sector rotation, while the tech community was starting to come around to Trump, I think by and large, the tech community is very strongly in favor of Harris and expects that they'll see some pretty favorable treatment. So that's good for the tech side of things. On the banks side of the sector picture, again, Trump has been very vocal about wanting to step back some of the regulation of banks and allow a lot more freedom in wake of that Supreme Court ruling. So I think if you continue to see Trump in the lead, that will be very positive for the financial sectors in the US.
Adam, you mentioned there Congress, the House of Representatives and the Senate. Could you just explain why it's so important about the votes and how the makeup of that affects things as well?
Absolutely. So, if you think about what George was talking about, we really have a horse race now again in the presidential picture. So I think it's going to be hard to tell exactly what's going to happen in the near term. But what may start to shake out very quickly is down ballot. Because what we were starting to set up for prior to Biden stepping back was, really a Republican sweep and an expectation that Trump would have free rein to pursue his policies. If Trump wins the presidency, but Harris runs strongly enough that she actually puts the House into Democratic hands, that will form a check on Trump's policies. He's going to have to work much more through executive action. And so the expectation of a more gridlocked government, which is also the base case for Harris winning the presidency, right? The Republicans are almost certain to take the Senate. So there's very little chance that you have a Democratic sweep role, means that you're going to see a much slower pace of legislation, of changes in fiscal policy with that more gridlocked setup. And that is why it's so important to see, can the Democrats put themselves back into competition for taking the House?
George, has there been any recent polls since what's happened with the Democrats and Biden stepping back as to who might control Congress?
Not really, but I totally agree with Adam. It's now a question of, can the change with Harris presumably being the Democratic nominee have that impact down ballot and give the Dems a better shot at taking the House? Because if you look at at least the congressional polls, or the generic congressional polls before Biden stepped down, it looked very, very tight. And you look at things like the Cook House ratings, again, it didn't look like either sort of party had the edge. So it's going to come down to kind of, as Adam was saying, the performance at the presidential level, whether that has an impact through the coattail effect. But I think as well, things like whether or not the topic of abortion, where there's clearly a partisan divide there, whether or not that plays into the how the House of Representatives shapes up, particularly as it did in the 2022 midterms when obviously it favoured the Democrats. But I completely agree with Adam in the sense that the Senate is effectively a lost cause for the Democrats.
I think it's really important to understand that the enthusiasm dynamic has really changed in the race here. So before Biden stepped back, there were so many concerns about his candidacy on the Democratic side, let alone amongst the general population or the swing voters, that you really saw donors starting to hold back. And so that enthusiasm gap you've seen now, granted, it's only been 72 hours, but this idea that, we're excited about the potential to be competitive in the race again, that we really push our case for our policies, I think is really likely to enhance that coattail effect George was talking about. And so when you think about the enthusiasm, one way to measure it, George talked about $100 million raised in the first 72 hours of Harris's campaign for president. And, if you actually widen the lens, you look at the super PACs, the numbers raised for the Democrats is actually $250 million, a very significant 72-hour period, partially reflecting some donors who've been holding back from Biden. But I think the likelihood of that carrying down ballot into the House is much more significant. If you think about the kinds of social issues that we think Harris will probably be more effective in pushing her case for against Trump, that's likely to also turn out voters. And so it really changes that dynamic and gives the Democrats a much better chance of potentially taking the House and certainly competing much more closely for the presidency. So I think that's a very, very important dynamic to understand here. George also talked a little bit about the polls. We did have a poll land just recently this morning showing that Harris actually is in the lead of Trump. Now it's within the margin of error, but I think directionally it shows you how much this race is tightened up.
George, back to you. So we're going to go theoretical now. Let's say Trump does win the presidency. What does that mean for the economy?
So I think it's difficult to work out the precise specifics, given that the Trump campaign has been fairly light on detail. But overall, at Schroders, when we've modelled the impact in terms of what the assumptions we've made, we think that Trump is going to have a reflationary impact, i.e. higher inflation, higher growth. So if we start with the inflation side, obviously Trump is campaigning on raising tariffs. He wants to raise them to 60% on China. And for the rest of the world, he wants to introduce a 10% universal baseline tariff. Now, we don't think he's going to go quite as far on both fronts. The reason being that if you look to his first term as an example, he made very similar threats, but instead what he did was he ratcheted up the tariffs in order to try and achieve trade agreements with various competitors. And so we think that's going to be very much the sort of playbook again this time round. And so we don't see that as being, we see that as being partly inflationary, but where we're really concerned at Schroders is on his immigration proposals, because once again, he's proposing that he will expel somewhere in the region of 10 to 15 million undocumented migrants, which is obviously a huge number. Again, he said similar things in 2016. He didn't quite achieve that. But what he did manage to do is restrict inward net migration. Now, that wasn't so much of an impact 8 years ago, but now the problem is that the labour force, if you look at since COVID, it's been entirely driven by the foreign-born labour force, whereas the native-born population has largely stagnated in the labour force. So we think that's going to lead to supply shortages on the labour front, and that's going to push up inflation through increased employee bargaining power and wage growth, of course. Just turning to the growth front, we also think that Trump is going to be pushing forward with extending his 2017 tax cuts, which are due to expire next year. He obviously wants to go even further. He'll be reliant on Congress there. And I think, as Adam made a good point, it's not really clear how that's going to shape up. But presuming he does get a red sweep, we'd imagine that he'd try and push some fairly big tax cuts through that way. But we also think, and again, as Adam was highlighting, this deregulatory push that we think we're going to see, particularly on the energy side, but we also suspect on financials as well. We think that he'll be easing red tape there, and that's going to help to increase credit availability, and that's going to, again, push up on growth. So for Trump, we think it'll very much push the US economy in a reflationary direction.
Adam, what does that all mean for markets?
It's interesting. I think for markets, actually, the difference in some ways is narrowing. So on the one hand, Paris will represent a continuation of the current Biden policies in large part. So, that means, continued focus on sort of middle class. So there's no desire from the Democratic Party to raise taxes on the middle class. In fact, you've seen sort of a shift in policies. Not so long ago, the Democrats were talking about wanting the Trump tax cuts to sunset in 2025, which is in current legislation. And now they're really talking about, we'd like to extend those tax cuts, certainly for everybody making less than $400,000 a year. The big difference comes on the corporate tax rate. So that would represent a continuation for markets, and I don't think you'd see a large reaction in the short term. I think the bigger reaction definitely comes if you get a red sweep, where there's an expectation on the equity market side that you would get much more permanent tax cuts. You would get an extension, not only of the existing tax cuts, but Trump has been talking about cutting corporate taxes further. And so I think that would support the equity markets. But I don't think you should expect the degree of rally that we saw in equity markets after Trump's election in 2016, because that was a much more radical shift in terms of policy. So we think either case is going to be much more about the underlying dynamics. And as George mentioned, that sort of growth impulse that might come from a Trump presidency, that higher growth, higher inflation, it's going to take time to play out. So I think the markets are going to take their time to try to price that in and figure out what are the specifics of the policy. How far can they go on the immigration side of things? What will the reaction of the bond markets be? I think what's really important to watch from here is the reaction of bond markets, the focus on sort of, some people call it the bond vigilantes. They push the long end of the curve, meaning longer dated treasury bonds, much higher in interest rates. That's going to actually have to have a real impact on fiscal policy. It's going to constrain what they can do, even in the situation of a red sweep or if you get a Democratic presidency. So the reaction of the markets actually is going to have a feedback loop into the policies that can be pursued.
George, Adam mentioned there that he sees probably Kamala Harris continuation of Biden policies. Does that mean the status quo for the economy as well, if Harris gets in?
Yeah, it would do, but not necessarily for that reason. So I think there's an open question whether or not Harris sticks to the Biden agenda. I think there's a strong case to be made that she will. But obviously as well, I think when you're behind in the polls like she is, and I take the point that obviously one of the recent polls suggests that the shifts might, the dynamics there might be changing, but she might change the policies. But I don't think that's the reason here. I think the reason you get a continuation is because the Senate is a lost cause for the Democrats. The Republicans are going to flip it. And so as a consequence, I think she's going to be hamstrung if she was to be president by that. And so I think from that perspective, you very much get the status quo. From a policy perspective, I totally agree. I don't think it really changes what her policy priorities are unless she can achieve those without the need of Congress. And I totally agree with Adam in the sense that I think there is definitely some bipartisan deal to be made, even with the Democrats taking the White House there on the tax cuts, because I think it's very unlikely that Kamala Harris will be, obviously, even if she was the president wanting to secure a second term, whether she would be quite happy for millions of Americans to suddenly see a tax rise from 2026 onwards. I think that would be a pretty good way to lose an election, I think.
Adam, final question to you. Is it the same old cliche for markets that largely it's seen that if the Republicans win, it's good for markets and Democrats not so good?
I'm not actually sure it is. I mean, there's the knee-jerk reaction versus what will happen over the medium term, and it's really going to depend on the policies that we've talked about. So, in fact, there's a lot of data that suggests over the full term, in the past 50 years, Democratic presidencies have actually seen larger gains in the stock market than Republican presidencies. So, I wouldn't trade a knee-jerk reaction. I think that sort of idea of Republicans are good for markets, Democrats are bad for markets is something that's a bit in the past. It's really going to be down to understanding the specific investments you're making and what the impacts of those policies are going to be.
Adam Farstrup in the US, thanks so much for joining us. And George,
thanks for having me.
Yeah, thank you very much. And George Brown in London, thanks so much.
Thank you.
Hopefully we're not going to get back together in another 2 weeks when something else extraordinary happens, but it's been great speaking to you. Cheers, guys.